Welcome to this month's Bright Market Minute. I'm Dr. Lisa Sturtevant, Bright MLS Chief Economist, and if you have 3 minutes, I have 3 things for you to watch here in the Mid-Atlantic housing market. First, while home sales activity has decelerated compared to the very fast pace of last year's market, buyers that are in the market continue to put upward pressure on prices. So in May, there were fewer home sales in the Bright MLS footprint than there were a year ago. And year-over-year home sales dropped the fastest in the Washington, D.C. area market with an 11.6% drop compared to last year. In Baltimore, sales were down 6.9% year-over-year. And in the Philadelphia region, home sales were down 6.3% compared to last year. There were even bigger year-over-year declines in new pending sales activity across the Mid-Atlantic, a signal that some buyers are pulling back. However, despite the slowdown in home sales activity, prices continue to go up. The median home price in May in the Mid-Atlantic region hit an all-time high of $399,000, which is up 9.6% compared to a year ago. Prices were up fastest in the Philadelphia region, where the median price increased by 12.7%. Prices were up 10% in Baltimore and were up 8% in the Washington area. I expect that home price growth will begin to ease in the coming months. I'm not expecting prices to fall, but we should look for prices to be rising at between 3 and 5% annually, rather than at the double-digit rates we've been seeing. A softening of demand is a key reason why we will see price pressures begin to ease. But the other reason prices will grow a little more slowly is that we should see supply increase. So that's the second thing to watch, inventory. For the first time since June of 2015, that's nearly 7 years ago, the overall inventory in the Bright region increased year over year, growing by 4.6%. Now, this is an important sign of the shift underway in the housing market, as we have been seeing historically and persistently low inventory really for years. Now, not all markets saw an increase in inventory, but in the Baltimore region, inventory was up 2.5% compared to a year ago. But in the Philadelphia and Washington area markets, we're still seeing active listings lower than they were last year. So what this means is a lot of the increase we're seeing in inventory is really being driven by areas outside of the major metropolitan areas, suburban markets, rural markets, and even some second home markets where supply is greater now than it was a year ago. The third thing to watch, and I know we're all watching them, is mortgage rates. On June 9th, Freddie Mac reported that the average rate on a 30-year fixed-rate mortgage was 5.23%, and that was up from 5.09% just the week before. It's also up 2 percentage points compared to where we were last year. And higher mortgage rates come as the Federal Reserve raises the federal funds rate and winds down its balance sheet in an effort to deal with persistently high inflation. The Federal Reserve really has been telegraphing these moves pretty clearly, so some of the impact of the Federal Reserve's actions are already baked into mortgage rates. But it is likely that we will see continued upward pressure on mortgage rates in the months to come, and that will continue to dampen overall demand. For some buyers, like all cash buyers or some higher income buyers, an uptick in rates won't be a deterrent. But for some first-time buyers and more moderate income buyers, those higher rates are really biting into their purchasing power, making it harder for them to buy a home and causing them to sit on the sidelines. That's it for this month's Market Minute. You can find all of our housing market reports on the Bright MLS website. Also check out the Bright MLS T3 Home Demand Index, which provides insights on buyer traffic and prospective demand in local markets across the Mid-Atlantic. See you next month.